Good morning, traders. Today is Friday, the 26th of March, 2021. My name is Neville Hornsey, market analyst with YouTrading. Today, I'll be talking about the dollar index, WTI crude, and natural gas. All right, turning to the charts. We've got the dollar index. The dollar is now trading above the 200 EMA. This is good for sentiment. It follows with the bullish momentum, and we've got a near-term, midterm rising trend. We've got higher highs and higher swing lows. We are above the 200 EMA. We are now also trading within this balance range here from sort of around August to November 2020. And I fully expect the 93 level to be tested to see if there's any resistance there. If prices just run through for whatever reason, so these swing highs here will be my next targets for any bullish continuation. If we get above them, then we've also got this sort of price action here, which will be the next sort of range to sort of test within. So yeah, while we're making high highs and high lows, you've got to be looking to buy the dip, but be aware that there are some roadblocks ahead on the dollar itself. Okay, the dollar rising has put some pressure on the crude prices, which will bring down energy complex overall, which will be great for reducing the inflationary effects that all the central bankers have said are transitory. If the energy complex should come down in price as the dollar gets higher, then that would be good for their outlook. Looking at the crude oil prices, we've broken the sort of extremely bullish trend here, and I fully expect this range here to be tested around the $52, $53 per barrel. And there's another rising trend line coming up through there as well. The current price action is pretty messy because when we've got higher dollar, we've got a container ship which has run aground in the Suez Canal, which is now blocking supply chains from the Middle East and Far East into Europe. And we'll talk about that again with natural gas. We've got warmer weather coming in, so the refiners are going to be going into maintenance mode. So there's a conflicting supply and demand, plus these higher prices and some sort of supply chain disruption going on. We're going to have to trade at the edges of this range. So if we were to actually look for a trade, you'd probably want to either trade at this sort of edge of the range. Maybe if prices were to sweep the swing high here and then come back down, that'd be good. Or if we did get to come back down to this range, see if there's like a false break lower before going back up. And ultimately, I expect some sort of break and retest, which may be happening right now. So if we do continue lower, then it should be quite evident on the smaller timeframes. All right, going to natural gas. Natural gas is under the Ichimoku cloud on the daily time frame, so that is bearish itself. There's resistance above, obviously. We have broken out of this corrective sort of structure here, and I fully expect this range to break lower, and we come back down to test swing lows from September 2020. If we can get through, obviously, this swing low here from the beginning of 2021. We're bang up against the 200-day EMA, so that's acting as some sort of resistance, and prices sort of compressing underneath that. So it's a good opportunity to look for a false break higher to then come back down to the bottom of this range. But until we actually see the supply chain disruptions in the Suez Canal resolved, we're probably going to get a lot of gas exported from America traveling east across the Atlantic into Europe. The sort of mid-America suffered quite a lot due to adverse weather. The weather's improving now, so they can release some of their exports. Once we've got this Suez Canal resolved, then we should be able to get back to normal trading, as the demand for gas is probably going to be a lot less. Okay, that's probably it for now. Take care for the rest of the day, and I'll speak to you next week.